Good afternoon, traders. This is Christian Farmer, Strategic Trader Group. This is your end of day market recap for Monday, November 24th. Welcome to the last week of trading in November and also holiday shortened week. Reminder that we have Thursday off and Friday we have a half a day. So market closes at 1 o'clock. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer right there. Yes, very much risk on today. Risk on market today. Nice follow through from what we saw on Friday, which was kind of the beginning of the bounce. We did not close on the highs on Friday, but very much, I'm going to talk about this in the beginning of the video here because I've been hammering this point home. This is very much a liquidity driven market right now. Why is that? Well, because there's a lot of leverage in the system right now. So look at the things that were up today, up the most. These are things that are kind of just your most risk on. Bitcoin was up over 5%. The ARK Innovation ETF was up well over 4%. The IBD 50 ETF was up well over 4%, and a lot of that having to do with just this. And again, I hate to bring it to break it down like this simple. It's not this simple. And I know people want to insert different factors here. I agree. Like the market is generally like this is a strong seasonal week for markets. I do believe in that too. It's usually, especially when we've kind of gone down or the market's been depressed, and we get to that I was say 4th of July, Thanksgiving weekend. It is a stronger seasonal week, but make no mistake about this, guys. This is all about right now. The what happened in the course of the last couple of weeks was a situation where the market had too much leverage in it. And when there's too much leverage in it and something changes, there could be basically a liquidity break to the downside and some unwinding of some overcrowded positions of what we had over the last couple weeks. Right? The market was really thrown off by this going back a couple weeks ago, where the market was pricing in fully an interest rate cut on the December 10th meeting. What happens on October 29th? Powell comes in and says, not so fast. There's no guarantee that we're going to cut interest rates. This goes down to about a 45% chance. The market sells off. Then when we had on Thursday, the same day that NVDA reported earnings, we had a whole bunch of economic reports that came out, included jobs numbers, and this dropped further. So looking at this, and you can kind of see this a little bit, I think it makes sense to kind of look at this on a graphical standpoint, but this is what I'm referring to. In the middle of October, and even before the 1029 meeting of the Fed, this was the market was really like overpricing in an interest rate cut for December 10th. That's when it peaked out. And there's a lot of people on Twitter or X or social media that kind of said the same thing. They said, hey, something changed in the middle of October. It got a lot more, setups weren't working the same way. The market got more difficult to trade in the middle of October. Well, that's when things started to back up. Liquidity started to come out, right? Based on the assumption, it started to lower the probability of a interest rate cut. So this is when it was like over 100%. This was the 1029, right before the 1029 meeting. And then you could see that the probability, it's weird because as this goes up, that means the probability is dropping. So it's a little bit counterintuitive, but and then all of a sudden, then fast forward till Thursday, where the economics drove this down, right? Everybody thinks it was NVIDIA last Thursday. It wasn't so much NVIDIA. It was the fact that that the probability got even worse in terms of the probability of an interest rate cut coming on the 10th. That's what the market is focused on right now. And again, I think it has to do with positioning, right? Remember, the fund manager survey came out about a week ago, which is a little bit stale information, but there's no cash on the sidelines. From the fund manager survey said that everybody had all their cash deployed into the market. I'm not going to call out any names, but somebody said somebody was trying to put a bullish spin on that. No, when you hear that there's no cash, and when there's very low cash balances, that means all the money is put to work. What happens when all the money is put to work? That means there's nobody left to buy. right? And that means that you're caught on the wrong side of the market when it begins to back up, and you're forced to kind of sell and to reduce some of your positions as the market starts to break down. Hence that big reversal that we got last week. Everybody, again, headlines all about NVIDIA. It wasn't all about NVIDIA, guys. It was about the economic reports, just as I thought that the economic reports might be more important than NVIDIA's earnings. Oh, that's a dare I say that on if I like if I were to put that on social media before, like people would really be angry because people think it's all about NVIDIA. And I get it. It partly is, and I'm not saying it's not, but right now this took center stage. So this is the reversal that we saw on Thursday. What happened on Friday morning? Right? Williams comes in, one of the voting Fed members, and says, "Hey, you know what? I think we could go ahead and cut interest rates on on uh, for the next Fed meeting." Right? Then, so that this jumped to 65%. What happened this morning? Another Fed speaker comes in, another voting member, Waller comes in and says, "Hey, I think we should cut interest rates on the 10th." One more member comes in today, Daly, and says, "Hey, I think it makes sense to cut interest rates December 10th." So we're back to an 80% chance that they're going to cut. Now, why did the Fed do this? I don't know. Maybe there was too much speculation in the market. I kind of think so, right? If you're standing on the sidelines and you're watching all of this go on in the equity market, where you're seeing every pocket of speculation, including all the cryptos, go crazy to the upside, you might want to say, you know what, we there's too much speculation. Let's dial this back a little bit and see what happens. And I think that's kind of maybe what they did, because now they've kind of walked it back. We're still not at 100%. And by the way, we haven't heard from Powell. We're not going to hear from any other Fed speakers unless they decide to leak some information and go on TV or make a statement, because they don't have any scheduled speeches, right? They got nothing, right? We got releases the beige book, and then the blackout starts on the 29th, but they're not doing any speeches, but I believe that they're trying to signal to the market, hey, relax, like we're going to come in and cut interest rates. Now, I'll get away from the subject in 2 seconds, but I just think it's important because everybody seems this is the simplest thing out there. I think it's if you go to Marty Zweig's rules, don't fight the Fed, don't fight the tape. Right? This is not anything new. This is how markets work over time. It just you can pinpoint this more because of all the speculation that's in the system and because of the over leverage, right? So it's much more sensitive right now to what the Fed is doing. If there wasn't as much leverage in the system, the market wouldn't be as sensitive to what's going on. But there's not a lot of cash on the sidelines. And again, please don't confuse what I'm saying with the cash on the sidelines versus what people will like to do about it. They'll create some false narrative with money market balances. That's different. What I'm referring to is like how much cash that a fund is managing, right? And they have let's say they have 100% money, right? That's how much, let's say it's $1 billion that they're managing, right? If they have $999 million deployed in the market, they don't have any cash on the sidelines. If they only have $500 million deployed, then it's not such a big deal about what the Fed is doing, right? Because everybody is not over leveraged. And we're talking about outright just what funds are doing. I'm not even talking about what retail was doing, which is they were all in. All of these retail people on social media that you hear about are using maximum leverage. Like that boggles my mind. But I think if you heard people and what they were doing over the course of the last couple months, they were using leverage, which to me is a big no-no, especially when the market was kind of doing what it's doing over the last couple months, when we saw just about every nook and cranny of the market go up. So that's my explanation. Again, it helps when we have seasonality too. Remember, we want to use all these little factors to our advantage to kind of increase the probability. But the last thing I'll say about this nonsense that we've heard over the last couple of weeks about, the crypto market and all the and glitches and all this stuff, it, if you look at other areas of the market, in my opinion, Bitcoin, cryptos, highly speculative. What else is highly speculative? The IBD 50 ETF, because it's holding some of your heavy growth names. Same thing with the ARK Innovation, and these funds are almost neck and neck with performance. So if you think that the crypto market had some mysterious glitch, then you probably want to be asking, what was the glitch in the IBD 50 ETF? What was the glitch in all the other highly speculative assets? Because they all fell the same, and they all almost went up the same today too. Bitcoin was up 5%. As I said, the IBD ETF was up almost 5%. And same thing with the ARK Innovation. These things are all moving in line. Why? What's the common denominator in these things? They're all highly speculative, right? That's all that they are. And they're moving with such high correlation. And I also think because of it's a similar, it's not just the Fed, but it's also the leverage. All right, let me move on from that. But if I didn't go over that in the beginning of this video, I think you're missing the 99% of what's going on right now in the market, because that's what it is. Now, once you move away from that highly speculative stuff, why did the Dow outperform for a while? Why did other, like, healthcare outperform so well so far? And I'm not talking about biotech, because I think biotech is a different animal, but healthcare stocks, pharma stocks, because they're not highly speculative, right? These things are more solid in terms of they're more grounded in terms of valuation. Most of them pay dividends, right? They're steady income streams. They're not going to be as sensitive to what I just showed you about, whether the implications or the probability of what the Fed is going to do, because they have real earning. I shouldn't say real earnings, but they're not as, Palantir, which is a price to sales ratio of, off the charts, right? And many of those other growth names too, their valuation is way out of the park in terms of normal. Hence, they're going to move with Bitcoin. That also really kind of just moves based on speculation and fund flows and things like that. Right. So, what did outperform besides those areas that I mentioned? Well, Q's had a big day, and I'm going to go over the performance of that. But even like something I don't, and I like to cover stuff that people don't talk about. But look at the silver and the gold miners, all of a sudden up 5.8. That's also in line with what? Mr. Bitcoin, right? Which is up, up over 5%. A lot of this stuff kind of moves in line with one another. The semis had a big day today, up 4% today. So I'm going to begin to kind of break down the technicals for you. I'll go through this really quickly, because I think what we want to see at this point is, has the picture really changed, or are we just coming back into some resistance? And I don't have the answer to that question yet. We're not back above. So where I would get more comfortable, regardless of what the Fed is doing, because I'm not sure that one more Fed cut is going to do it for the market. I think for now, it's holding the market in, but I still think that we may be in a little bit of a trouble area, because we're still below the 50-day moving average. And from a very technical, easy, again, I'm looking for like the easiest signals that you can get. We don't want to make the market super complicated. We want to make it easy. And I think if the indices do not reclaim their 50-day moving average or get rejected, we got problems on our hands. Now, it's too early to tell that. We had a heck of a rally day today, really nice follow through. But if we don't get out back above the 50-day moving average this week, or we get rejected here at the top of the value area, I think that tells you for now that the market may be more in a consolidation type situation. And you might need some more patience, right? We might need to hear from the Fed and say, hey, we're going to continue to cut interest rates. That should help the market as well. So SPY, that's what I would be watching, the 50-day moving average, also the top of the value area, 672.82. 1 hour value area. So we have not, and I would also watch where Thursday's highs were, because we are in this pattern right now of lower highs, right? And we could even zoom out further. Here's your high, lower high, lower high, lower high, lower high. For now, we could easily change this picture, but for now, that's the pattern that we're in right now. So we can't get too, like, in my opinion, you can't get super excited. Look at the cues, and I can even extend this trend line a bit. So can I do this here? Let's see. By the way, I'm gonna do this so that you can see this more. I'll figure that out later. I can't see it right away, but you could kind of see what I'm hinting at here. Right? Here's your highs. Right? Here's your high, lower high, lower high, lower high. We almost broke through, but for now, we're still in this pattern, right? For cues where we're still down in this downtrend channel, right? So I would think 50, same thing for SPY, as I said for SPY, 50-day moving average, and the level for this is 611.75. Now, again, this can still create some good trading opportunities as it did today. But I would not get over, like, people want the definitive answer to be like, we're going back to new highs. I don't know that. I think we might have a couple more good trading days this week, but we're still in this pattern below the 50-day moving average, which is not strength, right? IWM, which again did well today because of what I just said, right? The IWM loves, right, a dovish Fed, loves rate cuts. It really does not like when the Fed is not cutting and when the Fed is tightening, which is what they're doing right now, because the rate is at 4%, right? That's a tightening rate. So this has a ways to go. 50-day moving average, we're sitting here below the value area versus the other indices that are inside the value area. 242.17 is a level to watch too, which will also coincide with the 20-day moving average. So we're rallying from oversoldness right now, right? And that's basically what we've got going on here. Let's look at a couple other things here too. Let's look at the Dow, because I mentioned that. Not a big day for the Dow, because today was more about your higher speculative stuff, because of that. So again, that Fed situation that I talked about in the beginning of this video is not for all stocks, right? The Dow, most of those stocks, they do not need a rate cut. Like, they can kind of do their own thing. Sure, a rate cut will help the stocks in the Dow, but it's not going to be as sensitive as, your names that do not have as much earnings, your more speculative names. So this is still below the 50-day moving average. So what I want to, as I'm going through charts, is I want to see something get back above its 50-day moving average, right? That would tell me something good is going on. Here's the equally weighted S&P. Is this above the 50-day moving average? Nope. It did move up today, but it underperformed. It was only up, what, 40 basis points? Wow, that was only up 40 basis points today. QQEW below the 50-day moving average. QQQJ below the 50-day moving average. So again, great day, and I'm happy. I made money today. I hope you made money today. But we've got still some problem areas in the market. None of the indices are above their 50-day moving average. So why am I doing this? Am I doing this to be Debbie Downer? And am I a market bear? No, I'm not a market bear. But what I try to do is analyze the tape that's in front of me, not the tape that I want. Would I rather be bullish? Am I bullish long term? Yes, I'm bullish long term, because the market goes up. It goes up over time, right? But in the present, always in the present situation, I'm going to evaluate what the market is giving me. All right, let's talk about some stocks that I thought were really important today, or really good. In Google, I've been long Google. Nice to get this nice win today. Right? A lot of people talking about what's going on in their AI space. One thing that also strikes me with this AI space at this point is there's a lot of competition, right? There's 4 or 5 different places that you could go to use AI, right? And they're all racing with one another. They're all spending a lot. They're all competing with one another. But is that a saturated market in AI? Oh, it might be. It might be a saturated market in AI, because there's so many different models that you could use to get your answer, and they're all fighting with who's got the best one right now, right? So that's the situation, and apparently, like, Google is making some strides, and hence the price action is speaking to me, right? The price action is saying what you're hearing on the street about their AI model is very good. Now, what's going on with NVIDIA? I still think this is going to be a very important stock. Now, this did come back at the end of the day. I think there was an MSCI rebalance today, which helped the name. But this name is good for overall tech to do well. And I was very pleased because at one point the stock was flat for the day and the market was up. And I'm like, hey, that's exactly what we need to see. We don't want this whole market dependent on what NVIDIA does, in my opinion. And I talked a little bit about that in last week's videos too. So if it could kind of hang in here, maybe, go sideways, I just don't want to see this stock break down. And I think that would also, going back to what I was just talking about with the indices, you got to remember tech is 34% of the S&P. Um, that would help the overall market if this does not break down. Now, it took out this VPOC and it's holding here. Is this in a big position of strength? No, it's hanging on to support. And I mentioned on Friday the 180 level is going to be important. So far, it's hanging in there. All right. So that's not horrible. Now, some other names. All right. Notice this name. Very, very strong. LITE. Now, this is a high momentum name. Yes, they had good earnings. They do make money. They're up to 300. And this is one of your leaders in the market right now. Very, very strong. And notice that all through the last couple of weeks, all this name did was dip down to the 20-day moving average, right? It didn't get smoked and go down to like its 50, break its 50-day moving average. And I think that you want to pay attention to the names that both held up when the market was weak and then also excel like this when the market is up. Notice what this, so if we just dissect this name a little bit and how it traded today. Notice what it did. There was no dip in this thing today. Now, I like some of the other names in the group. I like Sienna. Right? Notice what Sienna did today. Big move in the beginning of the day and then just kind of flatlined. What about COHR? Now, again, this might have been because of the MSCI, but same thing. Like it peaked at around 1 o'clock today. So does this mean like I want to go out? This is, by the way, this is an important concept because I see retail traders do this all the time. They see one name in a group go up and they're like, okay, I'm going to go out and find the next best one, right? The one that's not up as much. My opinion and how I trade anyway, I'm not telling anybody what to do. I'm not giving out advice, but I always stick with the strongest one, right? Even though you think, oh, it's up too much. Well, what if it goes, what if it gets up to 400? Right? Faster than the rest of the names are moving. So I would stick with this name in the optical space. I know that there's a lot of strength because if you look at my earnings strength list, and I've got a couple of these on here. Oops, sorry, the screen didn't flip. Right, I've got this is all these names all had strong earnings, but LITE is in here, COHR is in here, and I'm not sure why I don't see Sienna, but it should be in this list. Maybe it didn't, maybe it wasn't up that much, or maybe I'm just missing it. But again, there's a few of these names that are on here. Not on there. Same thing with same thing with the memory chip names, right? Let's look at what SanDisk did today. Notice it started up strong all day, up 13%. Let's look at the daily chart in SanDisk. Do I want to own SanDisk? Because you also, as I mentioned a few minutes ago, right? There's a lot of companies that are doing the same thing. Right? Which one do I want to own if I'm going to own any of these? Probably SanDisk because Micron's out there. Now, some of them do a little bit different things, but I want to own, considering there's five to choose from, I probably want to own the strongest one. Right? Which name is above the 20-day moving average? Was SanDisk above the 20-day? Just right at the 20. So that'll be something to watch. STX. Nope, it's below the 20. What about Western Digital? Nope. right? All these are still below their 20-day moving average. So I want to own the one that's going to get back to new highs the fastest. My guess is it's going to be SanDisk, right? And then it's the same thing going through some other tech names, right? CLS, another one that almost broke maybe one day it broke its 50-day moving average. But, and again, these things really are wild, but I would watch what this does. There's a lot of names that do, that you could go through and do the same exact thing. So I would view, now again, these are different, they're slightly different, but I would probably own CLS over VRT, right? Dell is another one in this space too. Would I own Dell? No, right? Because it didn't hold up very well. There's a lot of names that did this over the last through the course of the last couple weeks. Any names that did something like this, even though okay, it might rally back up here, but it's probably not going to go right back up to new highs right away. It's probably going to stall someplace in here, right? But go through these names and say which names collapsed like this versus which names kind of hung in there, and that'll give you your answer of which names that you probably want to pursue in for longs. What's the other thing that Rambus was one name that I was watching, right? No, look at this name. Now, this name could definitely come back here, but notice how far it's below its 50-day moving average. So right then, like you could do like this is process of elimination. Why would I talk about process of elimination? Because there's like sometimes there could be like 8 of these tech companies that do the exact same thing. Right? And that's the same thing like when you're looking at the software space. Sometimes I look at the software space, right? And I'm unfamiliar with like a frog or a DOCN, and I bring up the website, and they all kind of do the same damn thing, right? There's like 20 software companies that all do like the enterprise software. There's very little difference between what they do. Hence, they go up on earnings, and a lot of times they don't go anywhere after that because there's too much competition. Like look at Pega, for instance, right? Here's a good example. Great earnings, goes all the way back down. I'm guessing because there's 20 other companies that do that do the same thing. So, it's important to try to get the market leader. And again, the the point that I'm trying to make here is that if you want to play in the sandbox of the AI trade right now, I would go through and look to see because there's a lot of names that there's a lot of competition out there in the AI space. And I'm not saying that the trade is over in AI. I'm just saying there's a lot of competition. And when you could find 5, 6 companies that do the same thing, that's a lot. And we're just talking about the United States. Like I didn't even when I went through the memory names, I didn't even talk about all the international names that make memory chips too. All right, so this is just I'm trying to give you a sense of what I'm looking at too when I'm making decisions, and how to construct which names you're going to go after. All right. What else did I want to go over? Any other things that stood out to me today? Here was the watch list that I construct over the weekend. By the way, we are going to be having a Black Friday special for year end for new members. GSAT is a name that I want to go over. And how could I forget this name? GRAL up huge today. Right, really, really nice performance for some of these names. So we'll go over a couple more names and then we'll call it a day. I know a lot of people were looking at this name, but look at the follow through out of the consolidation. This is another name. Again, this is biotech, so it's probably why it hung in there so well because biotech has been the leader of the market the last couple weeks. But look at this go sideways here, right? And then when the market starts to get better, look at the breakout in this thing. GSAT to a lesser extent, um, but nice turn here. Let's see if it can now get back to new highs. Nice touch off the 20-day moving average. But again, another one that really didn't break down. Right, just came into the 20-day moving average. Didn't look like there was any major volatility in the market. And I have to say, this group looked pretty good too. The casinos. Casinos, now again, they're not super high valuation, but look what LVS did. Marriott back to new highs today, right? Now, AXP did break down a little bit. It did break down below the 50. So it's a little bit deeper of a pullback than I usually want to see there. But I think AXP has a chance to outperform because it's in that space. Expedia also, had good earnings, only came down to the 20. So want to look for, in my opinion, want to look for names like this versus names that completely collapsed. Why? And again, why do some of these names completely collapse? Because there's no institutional support for them, right? You want to see. Remember, institutions often drive the market. I know from time to time, the last couple of years, it's been retail too. But you want to see when a name pulls back that institutions want to come in and start buying that name, right? That's also a a characteristic of market leadership, right? Market dip in somebody who says, "Hey, I want to buy that name." All right, guys, I'm going to leave it there, guys. I hope these video helps. These videos help. Again, I will give you the link for the special that we're having most likely tomorrow. Have a great night, and again, if the video helps, like, retweet,